Hello everyone, my name is Yazan Shafi. I'm the Chief Market Strategist in One Trading Markets. Today we are going to talk about the price action strategy. So it's a little bit advanced strategy that you can use it with the basic strategies that I already shared on my website. So the techniques of price action, or what's price action in details, is that uh, it's a trading system or trading technique in which the chart is used without any additions or with the very limited indicators. So it's based on like checking exactly a couple of patterns using these techniques to know what's behind each and every pattern, and based on that you can predict the movement of the market based on these patterns to know whether it's heading up or down. There are so many techniques to be used in the price action. We choose the best four for today to explain. The best four price action techniques are false break, breakout with a build up, the retest, and first pullback. We will start with each and every one. We will start with the false break, and for example, and then we explain it and we see in real market how does it look. So false break, as we know that breaking or surpassing a resistance level, it's an indicator of continuation of the market to go up, and vice versa. If we saw any break in the support, this is an indicator of continuation of going down. However, sometimes the market breaking or surpassing the resistance or support, but we see the opposite. So always when you are dealing with support and resistance, you have to take in consideration whether these breaks are fake or if it's confirmed. If you don't know about support and resistance, you can check it on my website, www.yazanshakfi.com, and there is a dedicated webinar explaining this in detail. I'm gonna show it to you, so you can just go to www.yazanshakfi.com/en, just to go to the English version, and you can go down, scroll down to the archive of previous lectures. The first one has the details of the support and resistance, just to have a full idea about it. Okay, so usually we say surpassing the resistance is a bullish sign or a sign of the market will go higher and higher, and breaking the support, it's an indicator that the market is bearish or there is an expectation of decline. However, if we see a market surpassing a resistance, but the other candle, whether it's 1 hour or 1 day or whatever you choose the time frame, it doesn't matter. But when you see like the first candle confirming a surpass of the resistance and the other one confirming exactly the opposite, this we call it a false break. And based on the false break, if you analyze it in a way, so in these levels, most of the normal or naive traders will take buy positions here. However, when the market go against them, I should go against them in this case because it's a false break, and my take profit should be their potential stop losses. So imagine you were buying at this level at the false break. Your stop loss might be below these yellow lines because these were the highs and the lows, and 90% of people put their stop losses here. So in this case, if I'm against them in the false break, I need to put my take profits as their potential stop losses, which are the nearest highs and lows the stop loss. I need to always look at the nearest value, not the nearest time, because here we have the arrow of time and the arrow of value. So I need to look vertically, which is value. So in this case, I would sell when I see this pattern, and my take profits are the nearest high, which is this one, followed by this one, this one, and this one, etc. And this is what happened. You see here again another false break. The market broke it, but there was no other confirmation, so market went down. And again, my take profits are my are their potential stop loss for those who enter the trade based on the support and resistance only. Is it clear? Let's have another example. For example, Tesla shares. You can see here there was a huge support at the area of 633. We saw market broke this price with a gap in 1 hour. The next hour, the market went up and closed above the support again, so it already wiped off the effect of the break, so now it's a false break. So my take profits again would be the potential stop losses, which are the nearest highs, and also the opening of any gaps. This would be considered, or those highs, this high, and this high in terms of the value. Okay, so this is when it comes to the false break. Let's have a look at a couple of examples. If we go to silver, for example, you can have a look here. If you can see it, the market today, just today, or like two days back, the silver price reached 23.9 and broke it in one candle. However, the next candle was negative. I'm gonna zoom in a little bit so you can see. You can see here, this candle was showing over here. It was showing a break of a resistance, the surface of resistance. The next candle was showing a false break. So based on that, my take profit, so imagine the market was here. I'm gonna delete this just for better illustration. So imagine the market was here and the first hour appeared. Oh, so it's a buy signal, but I always have to wait for a confirmation. The confirmation was false break, so I'm gonna sell, and my profits are their potential stop loss, which are the nearest lows or highs, so which is this level 1. I'm gonna color it in green, this one, followed by this one. So, and you can see that we reached them and we reached even more. So this is the first application of the price action that's called false break. Let's move to the other one, which is a breakout with a build-up. Breakout with a build-up, it happens when the market made a significant move, whether up or down, and then followed with a narrow candles. Again, the candles can be 1 hour, 1 day, 4 hour, or anything. This small candle movement represent uncertainty in the market. So after a big move, when we see uncertainty, we just put barriers of those small candles. Any break of this rectangle, which is represented with the narrow candles, will be considered as a buy signal if we break it, or if we surpass it to the higher level, or if we break it to the lower level, we consider it as a sell. So again, it's a series of candles that are moving sideways, or better if they are small candles moving in a sideway representing uncertainty. We draw a rectangle and we wait for any break of this rectangle. So you can see here, breaking it below, it's negative, and my take profits are the nearest high, which is this one, and this one here in the value. Okay, if we go back to this one, breaking this will result in taking profit into the nearest highs, which is this one and this one, and this is what happened exactly, and it was respected 100%. So let's move to see other examples. Here also there was a false break, just to hit on the false break, which is dollar yen. You can see here the market breaks this support. However, the market then cancel this breaks. So this is also a buying signal. And also for Amazon lately, there was also on 9th September, there was a false break. You can see it here, the market broke it, but then confirm going down. So the targets were the nearest highs and lows, which is this one, and this one, and this one also. Okay, let's go now to the breakout with a build up. So you can see here Cisco share, after a huge gap, a huge movement, there was a very good uncertainty in the market. Okay, very small candles, sideways movements. So I simply draw a rectangle here. You can draw it from here, insert, shape, and then you put rectangle and you drop it over here. Any break of the rectangle, it's a bearish signal if it's going down. So this is my take profit area. So let's consider that we were here. So if any break here, my targets are the nearest highs or lows, which is this one, and this is what happened, and it continues to fall by time. Okay, another example is the Bitcoin. Lately the market was moving high, and then we start seeing a sideways movement. So we just draw the uncertainty rectangle, we can call it, and any break of this rectangle is also a bearish side if it's going, or if it's breaking below, and if it's surpassing up, this is a bullish signal. Another example on gold, after this big move, you can see here the small candles moving in a sideway. Breaking it is a bullish signal also, and with the target of the nearest highs, which are 1, 2, and 3. And this is where we reached. So I took them based on the previous prices. So imagine we were here and we saw the break. So those are my targets. This high, and this high. And this is what happened exactly. Okay, and after reaching the last target, market went down. So this is the breakout with a build-up strategy, which is the second application of the price action. The third one is a retest. Retest happens after crossing any levels. When we cross any level, whether we break support or surpass resistance, most of the time the market go up again, let's say like you miss the break of this support, so you wait for a retest. Most probably markets do retests. Retest means market going up to the same level where it broke it. If you see the market made a retest and keep moving around this level without breaking it again, this is a very good signal to sell the market again. And vice versa, if you see any breaking in support, any breaking or any surpassing of resistance with a retest, this is also good. I don't have an example about it, but let me show you some retests. So we have here the Dow Jones lately on 8th or 9th of September, 10 days back. We saw that the market broke this level. You can see here there was a support here one time and then broke it and then did a retest, one time, two time retest, three time retest. So this was a very good example of a retest. My target when I see a retest, let's see from here, from this level, my targets would be the nearest highs and lows. So this is high in terms of value. I look at them in terms of value. So this is the nearest to this line. This is another one nearest to this line. And we have this one, this one, and this one. And then you decide based on your risk strategy. Okay, so this is an example of a retest. This is another example of a retest from the Nasdaq also. Breaking this support was very clear. You can see one time, two time, three time, four time couldn't break this support. However, breaking it gives us a very good movement south. Okay, any question on the retest? Okay, the fourth application is called the first pullback. So sometimes we're having a breakout, we're missing it, and we don't see any retest. So in this case, we use the moving average, which is the only indicator we use. We keep it as a support for ourselves. So let's say if the market reach this level when we saw a breakout and the moving is coming closer to the price and the price is pulling back a little bit, when we see any touch of the 20 simple moving average, this is an indicator of the continuation of the trend. And only we apply it on the first pullback. We don't apply it on the second one or the third one because we might be too late. So only on the first pullback. So again, breakout, no retest. We saw the moving average going up. The market was pulling toward the moving average. Any touch of the moving average, this is a good indicator to buy. And again, the take profit are the nearest highs and lows for us. Again, this is another one breaking of a support. This is negative. We missed it. No retest, but we saw that the market was testing the 20 moving average. So this is a good sell signal. So let's have some examples about it. So we can see here the pound, the market breaks this support, went down. You can see here. Let's imagine we were here and I entered late, like with 3-4 hours. The breaking of support, I already miss it. And I then wait for the moving average and the price to meet each other. Once they meet each other, this is an indicator of a continuation of a sell. and based on that, I put my targets to the nearest lows and highs, which is this one, and this one, and this one, and this one, which is the nearest highs and lows in terms of the value. And this is what happened exactly. And these are my targets. Okay, I think we have another example. Yes. So we have Apple shares as well, surpassing a resistance, no retest from here. Let's go back. Surpassing a resistance with no retest. I just wait for the moving average. Once we see any touch, this is a good buy indicator. Okay, my targets are the nearest highs and lows in terms of value, which is this one, and this one. And let's see what market happened. Want to reach them all and keep heading up. So basically, these indicators are used to support your trading and to give you a hint on when to enter the market based on these actions that happening on the price. This is my explanation for today. For any question or any details, you can contact me on Instagram on my account at Yazan Shakfi, or on my Telegram. Also, you can view my daily analysis at Yazan Shakfi Trading. On Telegram, we post every day analysis based on price action and so many other strategies. The strategies are multiple moving average, multiplication, price action, and so forth. So I will stop the recording for now, and I will take your questions if you have any.